Stock joining us from Shaw and Partners and Market Matters. Harry, good to catch up with you on a Thursday morning. So bearing in mind what we saw on global markets overnight, how are expected to open today locally?
Yeah, good morning, Andrew. It was a pretty weak session in the US overnight. Our futures are pointing to almost a 1% drop this morning. You know, it's sort of coming on the back of the midterm elections. There's a bit of uncertainty there. There was also some pretty strong moves in commodity markets on the downside overnight. We've seen coal come off reasonably well, oil's down a little bit, and base metals reasonably soft as well. US dollar strength overnight, that's a bit of a rebound from some weak sessions in recent weeks. But it's sort of important to put this all in context. At the moment, we've seen the Aussie ASX 200 bounce almost 8 or 9% from its lows. The small cap index, where I tend to spend most of my time, has bounced about 10% as well. So, you know, a 1% pullback in this sort of situation isn't a big deal. We've seen, you know, the market, like I said, out of October, early October lows, bounced really strongly despite some pretty bad news, or continuous bad news infecting this market. But the market sort of brushed it off, and to me that sort of signals that it's a reasonably strong market. I guess there might be a little bit of profit taking ahead of US CPI print tonight, and there's a bit of jobs data there, but bit of uncertainty at the moment, but by and large, the market seems to be brushing most of that weakness in terms of economic data at the moment.
A lot of movement in resources sector at the moment. In particular, we've seen the movement, particularly in gold stocks, in the last couple of days. How are you viewing that sector?
Yeah, big rebound in gold. It looks like gold price has started to break out a little bit. A lot of that has to do, once again, with that US dollar play there. We are bullish gold at the moment. We think that downtrend has sort of broken out, at least for the short term. Interesting to see how this one moves from here, but we're long gold across our portfolios, holding Newcrest and St Barbara, and Barrick Gold as well. If you want to look international, the space at the moment looks exceptionally cheap in terms of a present value situation. It just needs that gold tailwind to come through, and it does look like that turned. We saw yesterday, particularly St Barbara, which is a stock we own, that bounced really strongly. That's got a really heavily short position in that stock as well, around about 7-8% short there. And if that gold price continues to track higher, you probably expect that one to squeeze and that one to probably rally a bit over the top on the upside there as well.
All right, Harry, a little more specifically then, what's going on with, lots happening in the M&A space, but the perpetual bid, Regal Partners, its play, what's the latest on that?
Yeah, interesting one there. It's a bit of a love triangle going on at the moment, Andrew. Regal have come back to the table with a $33 per share bid for perpetual, with an Asian PE fund coming in the side as well. Perpetual have said that they've rejected that bid again. It's up spec from the $30 per share bid that they put forward about a week ago. But it's a really interesting story at the moment. You know, Pendle and Perpetual are sort of playing it out as if their deal's going forward. Regal sort of coming in the side and seeing if they can snuffle out something there. It would really be an interesting deal for Regal. They'd probably spin out their trustee business of Perpetual and take on the funds management side of that business. It would probably leave Regal with about $600 million to pay. Regal's got a reasonably strong cash position at the moment. It's important to note that they've got about $200 million liquid there ready to go. So there would still be a little bit of funding that they'd need to cover on their behalf. But by and large, Regal have done really well in terms of bringing in other managers. They've done that with VGI lately. But the space at the moment is exceptionally cheap, and Regal's got the sort of backing and the funds to sort of go out and make a play and do deals that make sense at this sort of time when fund managers in general are trading at reasonable discounts to what their historical values are.
Harry, it has been AGM season, hearing a lot from companies at the moment, particularly as they negotiate the current economic headwinds. Aussie Broadband had its investor day yesterday. What do we hear?
Yes, Aussie Broadband, they rallied pretty strongly yesterday. They are coming off a really low base. It's important to note that. We've started to see a sort of turning of the cycle here. They came out at their full year result and basically cleared the slate there, cleared the decks in terms of what expectations were. I guess at that point in time, it was probably the worst it was going to get for Aussie Broadband. If you think about NBN charges, their costs on that front were probably as bad as they were going to get. And they used that to then forecast their FY23 and beyond. What we've now started to see is that they're getting a little bit more comfortable where their costs will come in this year and beyond, and they're getting a lot more comfortable in terms of what they can do with their customer base in terms of growing that. And they've brought on their over the wire acquisition there, so they're moving into business, and that's a higher margin business. You think about what you can offer a retail customer, you can offer them broadband and mobile, you can offer business so much more as well. So if they can sort of tack on that side of the business, that will improve margins. On the retail front, they're looking to get their broadband connections up from about 600,000 at the moment up to about 1 million in FY23. That's huge growth. Their mobile customers, they're looking to take that from about 50 million. They're just shy of 50,000 up to about 250,000 in that time frame as well. So that's huge growth coming through on their retail side. They're seeing NBN and their back end costs sort of start to ease, and then they're bringing on this business side of things as well. They're looking to grow that over the wire side. And that should boost margins on that front as well. So overall, their AGM was reasonably positive. Sorry, it was Investor Day yesterday that they were really reasonably positive coming through there, and it makes the market a lot more comfortable where they are at. And we've seen a bounce from the stock. It got to around about $2, and it's trading about $2.60 at the moment. So we're really comfortable with where they're at. We're really comfortable with how management have sort of communicated since that FY22 result, and we're really comfortable with how the market started to understand that business and where that should be in FY25, and that's sort of the time frame we sort of like it to.
So is that your pick in the telco segment at the moment, particularly when it stacks up against the likes of Telstra and TPG, for instance?
Yes, Andrew, it's the fastest growing telco in terms of market share at the moment, Aussie Broadband. It's really hard to not like it here. I think if you look historically, it's the fastest growing for a number of years. On a historical basis, you take this back 30, 40 years. It's huge growth coming through. Yes, Telstra's got their own work getting done in terms of the corporate restructure there and how they can unlock value. But by and large, if you're looking for a little bit more risk and you're looking for a little bit more growth out of it, Aussie Broadband's definitely a place we're playing at the moment in the terms of the telcos.